Joanne, this is a totally unfair question, but what do you think these numbers are going to be once we factor in what's happened over the last 7 days and the banking system?
So almost all of the decline, actually all of the decline in the consumer sentiment index were realized prior to the collapse of SVB. And since then, the interviews that have come in have been fairly stable. Only a handful of them mentioned the banking crisis. And so this is pretty consistent with what we've seen historically in previous banking crises before the Great Financial Crisis and the S&L loan crisis. These bank failures weren't really at the top of the mind for consumers. But the news environment is very different now, and particularly with possible political factors around the perception of a bailout. I think it could be different this time, but it remains to be seen for the rest of this month.
Joanne, can you just crystallize for us how the data work here? How many, I said 15% a moment ago, how many of the interviews contained post-SVP information? And you talk about the interviews that are done subsequently. Can you just kind of quantify the various blocks in which, from a time point of view, we have seen the impact of the banking crisis having an effect? Absolutely.
So in today's preliminary release, 85% of the interviews were conducted prior to SVB's collapse. 15% were collected afterward. And all of the decline that we saw in consumer sentiment occurred prior to the collapse of SVB. And so leading into the banking crisis, we were already seeing downward momentum in consumer sentiment. People are continued to be concerned about inflation, in spite of the fact that expectations have ebbed a little bit.
Do you have the feeling that why are inflation expectations right now falling? Is it for the right or wrong reasons?
I think that inflation expectations are likely falling for reasonable reasons, but we shouldn't confuse the fact that they expect them to fall in the future with the fact that high prices still remain a big factor weighing down people's their personal finances. And so, even if they expect things to improve down the line, it's still hitting people's pocketbooks where it hurts now.
Where would you expect, you break down the data in a number of different ways in terms of kind of how you are able to nuance what people are telling you. Are people expecting interest rates? Would you expect people to be telling you that interest rates are going higher as a result of the banking crisis or lower? Or how would you expect this to fold in, this banking crisis, into things like, is now a good time to buy a new washing machine, etc.?
I think it's too early to tell in terms of any sort of interest rate expectation change as a result of the banking crisis. I think there aren't enough consumers paying close attention to that for that to move their interest rate expectations. But in the weeks ahead, we'll be able to see more. That being said, in terms of consumers' willingness to purchase, is it a good time to buy durables? We saw buying conditions for durables, autos, and cars all decline, or autos and houses all decline over March, primarily on the basis of high prices. And regardless of whether interest rates go up or down a little bit next week, interest borrowing costs continue to be very high right now, and are certainly affecting people's decision making.
Well, based on what interest rates have done over the past few weeks, they've gone up and down a lot in terms of the massive volatility that we've seen. When we get the next read and we get more of the survey incorporating what's happened with the banking system, where do you expect that to show up the most?
I expect it to show up the most in terms of how people perceive credit conditions. And so if credit continues to tighten, and it tightens even more as a result of fallout from the banking crisis, that's certainly going to affect consumers' attitudes and their behavior. I think it's less likely to come up in terms of actual jitters around banks, the financial sector and financial stability, because I just don't think people are paying that much attention to it right now.
What about business expectations?
Expectations for business conditions deteriorated this month as well. Every single component of the consumer sentiment index moved down, which is actually quite unusual. Usually there's a little bit of disagreement, but across the board, consumers see a mild worsening during the month of March.
This does not feel like a good report, Joanne. What was your overall takeaway?
It, I think consumers overall don't feel as good about the economy now as they did last month. I will say that in spite of the fact that everything moved together, they did move quite modestly. This was not a huge plummeting of consumer sentiment. We're still over 20% above the all-time low that we saw last June. And so consumers feel a lot better than they did last summer. But I think this is part of a bumpy road that is going to continue in the months ahead.